Here's the first Philip Morris position with that 2.8% at risk. Further down, rather than the 62.5 strike put, we're shown the March 60 put, which is 13% in the money, carries a 3.5% risk. And we have a third position as well, the March 57.5 put, risking 4.5% and only 8.5% in the money. Again, depending on your personal risk reward or your risk threshold, your expectancy of the stock reaching 57.5 in the next 30, 45 to 60 days, or $60 to where it would make the most sense to apply an income method, is going to help you determine which put you want to select. Now, we already had, when we first opened the position, one of the defaults we had was the open interest. And we put in a minimum contract size of 15, and we can compare the open interest on the different puts here as well. But I also made some other changes, didn't I? I went ahead and put in a screen for the percent dividend yield, for the earnings per share growth and broker recommendation, but that's not available on this screen. But if I'm going to use that as my analysis, I want to have it selected in my results table. So what we'll do is at the top of the results page, we have the long blue button for See More / Less Columns. And we click on that, and we saw this earlier. This will pull up the configuration page for us. All of the filters we can screen by are available to select. So over on the left, I can select my stock information. There's earnings per share growth. I want to see that percent dividend yield. And I probably also want to see I might want to see the average broker recommendation as well. And scroll further down, and we could also select to view the standard volume or the percentage volume on the stock as well. Sorry about that. Hold on one second here. There we go. And now on the right-hand side is our option information. We didn't select the volume, so I could go ahead and select the option volume, how many contracts traded today. If you wanted to view the delta, view the implied volatility, or view the other Greeks, you can select those as well. Once you've selected the criteria that you wish to view in the results table, simply click Save and Return. You'll of course be asked to refresh the page so they can reload the data and grab the new information. And now when our search results come up, we still have the same trades that match our criteria. You see no volume traded today, of course, but we do have our dividend yield. Philip Morris pays a 4.5% dividend. Kraft's a little bit lower, 3.9%. The highest dividend field looks like Altria here at 6.8%, if you wanted to factor that in as well. Now, one thing that you do want to keep in mind, and we are looking for positions that are at least 150 to 900 days out in time here, but remember the percent dividend we're viewing here is an annualized dividend. So if I looked at this Philip Morris position, I say, oh, I have a 2.8% at risk, but it pays a 4.5% dividend, I'm bulletproof from the beginning. I'm going to make a profit guaranteed. Well, no. Keep in mind this dividend is over 365-day time period. This put only protects us about 200 days out in time, 199 days out in time. So you'd want to factor that in when you're evaluating the dividend using this field. Now, for those of you that joined us on the webinar yesterday, we talked about the biotechs and then Bill's way of how he approaches it. He did send me a response. He is joining us today, and he did send me a response saying he'd be glad to later on in time with Kurt host or co-host a presentation showing how he uses these the married put tools to search for his positions on biotechs. But let's scroll down and let's remove some of the stock information and the dividend field requirements we put in. And I'll leave about 500,000 average volume in the 15 open interest. I'm still going to look for stocks that are trading in an uptrend. But rather than using a recommended list to search for stocks that are just in the IBD 100 and canceling list, the S&P 5-star list, and so forth, I can use the sector and industries and just screen for stocks that are in a certain sector or industry. And for example, I could select the healthcare, which would include the biotech, biotechnology and drugs, diagnostics, for example, or I even could select just biotechnology or biotechnology and drugs. So now I'm going to keep this basic criteria but just screen against healthcare, and that's just a basic step. Now, from what Bill said yesterday is that he knows he has to take at times on a higher risk because of the volatility of some of these biotechs. So I might change my risk requirements from between 2.5 to 7% up to maybe 15 or 20. But that's just one of the ways that you can look for some of the smaller size positions or the biotech stocks that might be affected by that range. And Bill will go further into that once we get potentially set up with a special presentation with Kurt on how Bill is using the tools. All right, I'm actually just going to go back now to something I have called Dividend Search August 27th, which is very similar to the dividend search we just created. A little subtle difference here. We now have Abbott Labs on the top rather than that Philip Morris position. So we've shown how you can customize the search tool to match your investment style for the type of stocks you like to use. Just put in the criteria you want to see, but keep that risk level based on your personal threshold, less than single digits, less than 9%, less than 7%, still looking for positions 150 days out in time with a risk less of 20%, or a range in the money of less than 20%. Once you've identified those, use the More Information buttons. Take a look at the stock chart. Make sure it's a pattern that you're interested in trading and you're comfortable with. Look at the company news, information, profile. Link to the Search by Symbol tool to do other comparisons of the different combinations you could use, which one matches your risk and your expectation of the stock going forward. Here's an Abbott Labs position. We're just going to use this as a further example of the next couple of steps, and then we're going to dive right into the portfolio finally. I know a lot of you have been waiting for that. So my last step now is that I want to link, use the More Information button after I've analyzed the search by symbol, and I'm going to take a look at the profit and loss chart. And this will give me a graphical interpretation of the position, but it'll also allow me to run what Kurt refers to in the blueprint as the catastrophe reports or the what-if scenarios. Here's an the Abbott Labs position that was listed. Buy shares of Abbott Labs at 50.30, and we could buy the February 55 strike put for $6.50. This would make our total investment $56.80, or our total net debit for 100 shares and one put contract to be $5,680. We're guaranteed to get $55 back, or $5,500 back. So our risk is $180 for the $56.80 investment, or 3.2%. As you can see, we have an unlimited upside profit potential. And the blue hockey stick graph, this shows us the standard married put profit and loss at expiration. If we held the position all the way to February expiration, made no adjustments, well, we wouldn't expect to see a profit unless the stock was trading above 56.80. There's our break even right there. However, this curved red line shows us what the position might look like at the halfway point using the Black-Scholes pricing model to estimate what the value of the put would be at the halfway point, which in this case would be November 26, 2010. So you see our break even is much different. It's around $53, $54 roughly here on November 26th. My expectation, and when I open an RPM, is I think the stock might be trading at a certain price within the next 30 to 45 days. So what if my expectation was Abbott Labs might be trading at around $52 or $53 in the next 3 weeks or so? Well, down below the profit and loss chart, we'll just go ahead and put in $53 per share, and I'll click the drop-down menu for the expected date, and let's just go down about 3 weeks. Let's just say September 21st.